Welcome, everyone, to another episode of the Endeavour Exchange, where we're talking all the trends affecting you and your money. Here with my partner, Grant White, again, to discuss some of these topics and kind of go back and forth here and get a couple different opinions on what's going on. So we'll get things started. Grant, office utilization rates. Are people coming back to the office? We saw a interesting chart to start that we can kind of throw up to show people here.
Yeah.
Looks very much like a cliff.
Well, I think the question, when are people coming back? Are people coming back to downtowns? Because, if you take a look at the chart that we're showing, you can see that, numbers have obviously fallen off the cliff during the pandemic, and that's not a surprise to anybody. And currently they're on the way back up, but you can see we're only at about depending on which city you're looking at, and the chart's showing a bunch of major cities from around the world, and you can see that we're anywhere from 10 to about 35% back in terms of office utilization rate. So we got a long way to go before it gets back to where we were before. But I don't think that's any surprise. I think that all you have to do is look around downtown Winnipeg where we are. And you can go to Winnipeg Square, and you can see that a lot of places are still closed up. A lot of the cages are still closed around the stores. Starbucks has closed, I think, 300 stores across the country. I haven't looked exactly where they are. I know in Winnipeg, the downtown one, actually everyone in the downtown area is currently closed, and some of them are closed permanently. And so you can see where Starbucks' head is at as it relates to what's going to happen downtown. So I got to think that we're at least 4 to 5 years away from getting back to normal. And again, that's just my opinion on it.
Mm-hmm.
But speaking as a business owner and looking at what's going on downtown, looking at downtown rental rates, things like that.
When we get back to normal, do you think it's normal the way it was prior to the pandemic, or do you think we're going to be under, because or a lot of these businesses have realized how much their footprint costs them, and that remote work or a combination of remote and in office, this hybrid model that everyone's talking about?
So I have two thoughts on this. One, first and foremost, is that we're a social species. We like to work with each other. We like to be around in groups of people. Like that's speaking in generalities. So we are a social species. It's kind of built into our DNA that we do like to sit across the table from people.
Mm-hmm.
I don't think that's going away. But in saying that, I don't think it's going to be the same either. And to your point, like flexible workspaces, I think are going to be more of the thing. And certainly companies are looking at that right now, knowing that, hey, we've had people working from home for a year and a half now. The businesses have continued to run. In some cases, the businesses have run better. In some cases, they've run worse, but some cases they've run better. And so I think a lot of companies, and especially the national firms, which tend to have a lot of real estate in the downtown areas, are thinking that, we can probably have more flexible workspaces where people are in the office maybe half the time, maybe 3/4 of the time, but they're able to save 25% or 30% of their real estate costs by doing that. So I think that's the case. But I don't think people are going to go completely remote forever. I think there's value in sitting across the table from some of your stakeholders internally. I think in negotiation purposes, there's value in sitting across the table from somebody. Coaching certainly works a lot better when you're with somebody in person versus a Zoom or a Teams meeting. So there's a lot of things that are going to go back to the way they were, maybe slowly, but I don't think this is a complete work from home forever. So downtown cores will come back, but I do think it's going to take a lot of time. I mean, again, 4 to 5 years maybe, and that might not be what everybody wants to hear, but there is opportunities in that in other real estate, and there is opportunities in that. My biggest fear is the peripheral businesses. I mean, there's a lot of businesses, the restaurants, it could be even like the UPS stores, things like that are downtown, that are reliant on business being done downtown, that are paying fat rents to be in this area because this was the most desired areas.
We still can't get our dry cleaning from
cleaning, things like that.
Yeah.
That's the biggest fear. The national firms, they'll be fine. It's the smaller companies that rely on that traffic, restaurants, stores, things like that. That's going to be a struggle, and because they won't survive 5 years, obviously, with lower traffic. They rely on that. So that's my major concern. But I think it is what it is as it relates to like trends in workplaces. It's going to take some time to get back. Now, speaking of, especially national firms or bigger firms, and there are a lot of companies that have excess cash they've been building cash, and that's naturally sometimes what companies do, through these types of events. And so they build cash up. Is that going to be enough to drive the recovery? Because we're in recovery now. Is it going to be enough to sustain it and drive it?
Well, as you mentioned, so there's a report that came out by CIBC talking about a lot of this excess cash that's been built up on the business's balance sheet. So it's not just, I know we've heard about this consumers, it's not just the consumers who've been building cash. They built up, it's over $100 billion now is the estimate of how much cash has been built up. But according to economist Benjamin Tal from CIBC, who was the individual who released this report, he's saying don't count on this spending to drive the economic recovery. Why? Well, there's just so much uncertainty for businesses that remains there. They have it. It seems like they're going to be holding it. We're seeing different provinces going through their third wave. This weekend we've seen cases tick upwards here, and I just think a lot of these businesses are in a mode of, it's great that we have this cash. We're not necessarily ready to spend it because we don't know exactly what that future looks like. So the other thing to consider is the estimates with the CEBA, the program where the money had been lent and they ultimately have to pay it back. Some of it is forgivable. There's about $45 billion of that out there. So when we're talking $100 billion in excess cash, some of that is from some of these loan programs, and so it's hard to know exactly how much of that is there and how much of that is just kind of sitting on the books to, again, weather the storm of a very uncertain situation, not necessarily to go out and be expanding production and things like that. So the other question to consider is, how much of it is there for, just regular maintenance, like the cash that's there, the regular maintenance on the businesses, versus how much is expanding, going to be used to expand production. So these types of things we don't know until the businesses start going and start spending the money, and that's when we'll figure out what direction they're going in. But at this time, it's really going to have to be the consumer, according to Benjamin Tal here, the consumer is really going to be driving the recovery. I'd say before even the consumer, it's obviously, and we've talked about this, vaccines.
Yeah.
The consumer won't be able to drive the recovery without the vaccines making their way to people's arms. So
it is really interesting, like how much cash is, businesses, with individuals, like how much cash is sitting on the sidelines and what that could lead to. And I think from the company's perspective, it's interesting because you're right, like, there's a lot of uncertainty still out there. Vaccinations are rolling out, but we've got variants out there. We've got, caseloads are increasing here in Canada, things like that. And so there, where are things going to be in a year from now? We don't know. We're optimistic. We think things are going to go pretty well, but again, there is uncertainty there. But that also creates an interesting opportunity for the more innovative firms, or maybe the more aggressive firms, to utilize cash. And I still think that there's opportunities for those companies to take advantage. But one company spending their cash isn't going to be enough to drive an economic recovery, obviously. But it does create opportunities for those businesses that if everybody else is kind of being sleepy or being just a little bit cautious, the companies that will take the chances maybe and invest in their businesses right now have an opportunity. And likewise, I think there's lots of opportunities for individuals, not just on the investment front, but there's going to be deals out there and stuff like that. And we're seeing it right now, even if you you can't really travel right now, but I think there's going to be a boom of things like that coming out of the pandemic. So it'd be really interesting to see where all that money goes.
Yeah, absolutely. It's going to, and back to the consumer, it'll be interesting to see how we spend when things become more normal than they are today. I know I can't wait to be able to sit with a group of friends at a restaurant and just have a pint and literally just be in that environment. Concerts, itching to go to concerts, sporting events. So again, I think it's going to be the consumer, but in order for that to happen,
I think we might be in for one of the biggest consumer booms in spending that we have seen in our lifetimes. And there's certainly potential for that to happen. Again, with cash on the sidelines as people become more comfortable. Everybody has been missing out. Everybody's going to feel like they've lost 2 years of their life, so they're going to want to go make up for lost time.
And I think that's when you'll see the businesses spend. So it's vaccinations, consumers, businesses will follow wherever the consumer is going to go. They're going to try to meet that demand.
Well, and I think you have to just look at like the U.S. and what's going on there a little bit as well, because they're a little bit further ahead in their vaccination programs. They might have been more comfortable with this thing the whole time than Canadians were, and again in general. But you're seeing spending tick up there. Last month, they came in at a huge number, a 10% increase in consumer spending. So that's starting to give confidence to business in the States. So yeah, it'll be interesting to see where things go.
Absolutely. More on the economic front. A couple weeks back, we saw some news from the IMF where they upgraded Canada's outlook by the most among advanced economies. So maybe you could share a little bit more about why the IMF did this.
Well, the IMF actually came out with some pretty optimistic numbers all around, right? For the global economy, the global expansion to be about 6%, give or take, and so as the vaccination programs are rolling out, they're getting more comfortable. Now Canada naturally gets a little bit, I think, more of a boom as compared to some of the other countries. We're getting more uptick anyway, an increase. We're not growing as fast as some of the other countries. Like the U.S. is predicted to grow faster than Canada is.
Well, yeah, that's the other thing worth noting. I think when I first read the headline, and I think a lot of people probably saw it in the news and whatnot, because it was fairly big news. It did make you know, front page headlines.
Yeah.
But it's not that we're not growing the fastest. It's that the IMF has changed our outlook the most. So our increase from where they thought we would be to where we are, that's what's changed, and that's where we were the highest. But
yeah, and I think that's a function of, you know, as demand comes back to the global economy, people are demanding more energy. So we are a major energy country. I mean, like oil is a big part of our economy. So they're going to be demanding more. People are going to be like driving. They're going to be doing more. They're going to be buying more. So there's going to be lots of uptick in energy, but also materials and resources. Like again, that's a big part of our economy. And so it's natural to think that we, as a major exporter of those things, will be able to sell more of the stuff that we have in Canada. And so I think that's the major reason why we're getting the most lift in terms of the earlier projected numbers. The Bank of Canada also came out with bigger projections as well, or heightened projections. Not as much as the IMF. The IMF is actually more optimistic as compared to the Bank of Canada. But so I think that's a major reason for it. But you know, again, as the vaccination programs continue to roll out, the global economy is looking better and better. We are expecting to see a big, in fact, the biggest global expansion since at least the 80s, if not since they started recording this. But we're looking at the biggest expansion this year in 2021. Now that's not all that surprising, because we saw a big reduction or a big decrease last year of about 3% globally in global GDP. So naturally, we were going to get a big boom this year as things kind of got back to where they were. But we are expecting a couple good years here in terms of expansion. Now, what that means for investments is it's hard to say, because this market is already looking forward. This market is already expecting that big expansion.
Yeah.
Yeah. So it's not to say that, you know, these numbers are just justifying where I think the market is. So I think you still got to be a little bit careful, because we can see, I mean, as we saw last year, we saw big contraction in the economy, and then the market still did quite well, or reasonably well last year, depending on which market you're looking at.
And then as we've gotten more certainty around vaccines and the pandemic, we've seen a lot of those businesses that initially benefited actually pull back at the time when things started to look a lot better. So
yeah. Now, I think this is going to be one key highlight is this is going to be an uneven recovery, though. This is, I mean, we've talked about K-shaped recoveries like internally and within an economy, but globally, I think that this is going to be very uneven because, and as the IMF pointed out, a lot of where they expect the growth to come from is from stimulus packages. I mean, there was something like $16 trillion spent globally so far in government programs to build back the economy, to bring it back. You know, we know what we've done here in Canada, we know to the tune of about $400 billion. And we're continuing to spend based on what we expect to see out of the budget today from the early notes that I've seen. So there's going to be lots of spending. The U.S. just announced a $1.9 trillion stimulus package, and so there is going to be a lot of spending. But not every country can spend that money. There's you know, poorer nations will certainly struggle to keep up with the rest of the world, and that's going to have interesting ramifications globally as well. What it means longer term, we don't know, other than I think it means that, you know, the wealthy nations continue to get wealthier, the poorer nations continue to remain poor, and the gap just continues to widen. And so at some point, that's something that the world will need to address. There's going to be socioeconomic issues that get caused, or that are being caused already, but there'll be more of them if that's not addressed. So that's something to be certainly aware of. But all in, I think the next couple of years from global expansion seem to look pretty good, and Canada should be, if we play our cards right, we should be able to do quite well and benefit from that as the rest of the world looks to buy the things that we sell. So,
absolutely.
Now, speaking of buying the things that we sell, China is a country that buys a lot of things that we sell. And we buy a lot of things they sell too. But what they're looking to buy is a lot of resources, energy, natural gas, things like that. So just speaking of China, though, is China on the path? Because we've talked about this before. They're obviously growing at an incredible rate. Are they on the path to take over the world leader in terms of GDP from the U.S.? What does that look like?
Well, as you mentioned, they've been racing to become the world's largest economy since about 1970. And with the pandemic, we could see China, what experts are saying is we could see China overtake the U.S. in this next decade here. In 2000, China's GDP was just 11.8% of U.S. GDP. And now they're kind of clipping at their heels. They're right behind them now. Mm-hmm. So, the country, we actually have a chart here to show you, but the country urbanized and became a leading exporter right around that time in the 2000s. And that's when you really started to see their kind of GDP, and you'll see in this chart really kind of start ticking upwards following the path along the U.S. In 2008, the global financial crisis, we saw massive infrastructure spending and an investment drive from China in their infrastructure that, again, kind of accelerated that pace. And you'll even see that in the chart there. COVID has provided the most recent inflection point, and because China's seen a fast recovery, it's actually increased its share of global output the quickest it has in the last century. So it's accelerating. The country's now also put forward ambitious targets to double the size of their economy by 2035. They're focusing on increasing spending on areas like scientific research and innovation. We know this. We've talked about this. Their hope is that they'll ultimately become the global leader in areas like artificial intelligence, biotech, and green energy, which actually we saw some talk of that this morning with China agreeing to some climate initiatives. Whether or not they'll meet that, that's another question for debate.
Yeah.
So right now, it's looking like they can. The speed at which and the change at the pandemic, it looks like in the next decade they will overtake the U.S. Will they do that? Good chance. Will they stay there? I guess that's where there's more of a debate, and some of the things that could get in the way. I know, and we have a second chart here. We were talking about this just earlier. Aging population in China. Mm-hmm. When you compare the population in China and the population to the U.S., China has a much larger aging population. So if we look at our chart here, it's showing us in China the people below the age of 65, so 65 and younger, and you see that fall off like a cliff here, moving forward into kind of 2050 and beyond. So some longer term outlook here, but not that far off. And in the U.S., they're just not seeing that drop. So they may overtake the U.S. here in the near term, but it remains to be seen whether or not they'll be able to stay there with some of these challenges. So
yeah, it's going to be an interesting period of time, and I think that how the U.S. handles things going forward is going to be very interesting from a political standpoint. Mm-hmm. I mean, I don't think there's anything that the Americans should be too afraid of or too worried about. I mean, I think it's like a point of pride that they've been like the largest economy in the world by far for quite some time. And I mean, all good things come to an end, obviously, but it doesn't mean like the days of America as a superpower are over or anything like that.
Absolutely not.
So I don't think that this is actually. I mean, hey, we know this is. It's good like from an investment standpoint. There's lots of opportunities in China. It's essentially still. I don't know if you can still classify it as an emerging market, but it's kind of still an emerging investment opportunity for a lot of people around the world. And so I think that there's lots of great things about this as well, where you can just get those opportunities. But it's going to be interesting. There's certainly headwinds that China is going to face. That it's not going to be a straight line.
No, the other to add to that, and one of these comes back to what you talked about with the U.S. But first, China has extremely large amounts of debt out there. There's a lot of debt in China, so that's another concern there that could at some point. Now they have a lot more control over how they handle monetary policy and things like that. There's less politics involved with it. China can kind of operate in a manner that they see fit and just take action when they think there's an economic problem. But as well, the U.S. and their allies are you could argue, a headwind to China. Biden, we've heard recently, is doubling down on on some of the measures imposed by the Trump administration to cut China's access to key technologies such as microchips. China's also meeting fiercer opposition elsewhere. So in Europe, companies face tighter investment screening, and even in some of the Asian rivals in Japan, India, Australia, they're all combining with the U.S. to create kind of this geopolitical bloc, you could say, at limiting China's influence. And not all of that is because we're necessarily concerned over China's economic power.
Yeah,
there's some other elements going on there that people don't like how China is governing and certain things that are going on within their own borders. So
it is interesting. Like the U.S.'s greatest power in all this might be their allies, right? And the ability to work together with especially European nations and Canada, Australia. There's lots of
who have just a different, I guess you could say, worldview on how
absolutely
something should be governed, and so that's a headwind as well. But in short, are they going to overtake the U.S.? Maybe. If it happens, I think it may happen in the next decade. Will they stay there? I don't think as you mentioned, I don't think it necessarily matters whether or not they stay there or not. With that population, I don't think the U.S. is going to be out of the game, as you said. They'll be very close as well. So
no, I think the other side of it is I'm not sure that China wants to spend the same amount of money on things like military, for example, as the U.S. is. The U.S. spends so much money on military. I don't think China wants to get into that game necessarily. They want to hold their own. Clearly, they've with their aircraft carrier programs and stuff like that. But I don't think they want to get into the game of trying to police the world like China has, or it's like the U.S. has, I should say. So again, the U.S. is still going to be a dominant player in everything going forward still. So it's going to be an interesting time.
Absolutely. Well, with that, we'll close it off for today. Thanks for joining me, Grant. Always fun to get on here with you.
Yeah, for sure.
Check us out, our website, www.endeavourwealth.ca. You can find us, Endeavour Wealth Management, on places like Facebook, LinkedIn, YouTube. So if there is ever any questions as it relates to your personal finances or investment questions, market questions, we are happy to answer those. And as well, we'd be happy for some topics for the Endeavour Exchange. Yeah, throw them at us. We love talking. I don't know if that's necessarily a good or bad thing, but good in this case. So that is always open. You can find all of our contact information on that website I gave you. Feel free to reach out.